So I think everything is pretty well awaited on the market now from the FMC, and everyone, as I say, was expecting a 50. Well, the majority of the market was expecting a 50 basis point cut, and indeed, I keep saying that was too hyped up and too stupid in a certain sense, because inflation is still so high and the core inflation is still higher than the normal inflation. So that should be the opposite. The core inflation should be lower because there is less noises on the so yeah, so a lot of people was asking about what I think about 50 basis points cut. I don't think this is doable. And as we had the release from the CPI yesterday, coming up a little bit higher on the core CPI, and that made 0.1% higher, but it still is the core CPI. So yes, it brings a lot of importance. Okay, as I said on my video today, if it was the normal CPI, just the CPI month over month, this wouldn't bring so much importance to the market as it is with the core CPI. But as is the core CPI, this is where the central bank looks much more into the market, into the inflation. Therefore the market precifies bigger and bigger. All right. So therefore, we've seen this happen. So a completely switch from, I think, last week on Thursday when we've looked at it, it was 40% on here and 60% on here. These indicators to me that the market was waiting for a lower CPI. Okay, when we have a higher weighting here, a higher prediction here, in that case was 40% against 60% on this 25. Okay, what happened is that the market was expecting the inflation to come lower. So they were pricifying. And if the inflation had to come lower, then that would be the opposite. 87 probably would be expecting a 50 basis point cut, and 13% would be expecting, 13% would be expecting a 25 basis point cut. Okay. So really interesting how the CMA2 is really helpful. As they ask all the analysts, they ask all the economists around the globe to have a look on it. But okay, so what I want to talk today is, of course, the US CPI from last night, yesterday, plus the ECB today, plus, sorry guys, I didn't have a good night's sleep, plus has the market already factoring a possible euro rate cut this evening? Yeah, so that's exactly what I want to talk about as well, the rate cut about the euro. And last but not least, having a look at some pairs and how this can affect the market dynamics. Okay. All right, so let's start with USA CPI. Where it is here. That's core inflation rate of a month. This one, sorry, this one and this one. Okay, so let's start with not the core month over month. Let's start with the core year over year. So we've seen that the market was specifying at 3.2%. All right, as no changes from the previous. So 3.2%, exactly as the previous, that was the forecast, and it came up as 3.2%. Right, so 3.2%, it is to hold the call in a year over year rate. It is high. Okay, so we're still pretty far from what it's supposed to be. As maybe everyone knows here, but I'm going to tell again, we need to have a certain target for the central bank. And in this scenario, the target for the FMC, well, for the Fed indeed, is 2%. So they're still 1.2% higher than what is supposed to be. And in an essence, This, of course, drives the market in a certain way that it shouldn't. It shouldn't take much to have strengthening or weakening. So it's a very sensitive data, all right? Especially the core, okay? Because the core inflation it excludes the food and the fuel prices, all right, the fuel costs. So it says here, food and fuel costs, so it excludes these. So basically, this is very volatile. If we see, where is the charts? Charts. Well, I thought I had a chart here. Anyways, let me open a chart. So if we see the Brent price, we can see that this dropped a lot, right? It has been dropping a lot since April. All right, we've seen a drop from September last year all the way down to December. And then from December to August, we've seen a continuation of the uptrend. And then now a really, really steepening curve to the downside. That is good because yesterday, actually, I went to fill it up my car with petrol. And it was costing me 157. And I used to pay 190. So that is pretty decent price, to be honest, with everyone. And it's due, of course, because of these down move from August to up to date. So we've done all the way up from $91 down to 78, and then up again to 88, and then down to 71. That is at the moment. We may see some corrections here, but a continuation to the downside. Okay, so it's very volatile, as everyone can see here. Where is yeah, so the core excludes these. So exclude this volatility, all right? And then when you exclude this volatility, what happens? It should be lower, okay? Because you're excluding two items. You're excluding food and fuel costs, Brent, energy, etc. All right. But what happened with the rate, the normal inflation month over month, is that both of them, all right, the month over month, sorry, came in as the forecasted as well, 0.2. But the year over year came in a bit lower, so that's good. So from 2.6% to 2.5%. Let me just confirm this data because I think this data may have it wrong. Let me just check it again, guys, just a second. Yesterday, this is the inflation rate over this is the CPI over year. Okay. All right. So the forecast here is supposed to be 2.5 here, and it came up to be 2. So it came up normal. Okay, it didn't came up lower. So it's supposed to be 2.5 here. It's just maybe a misunderstood from the economic calendar, but it came in as expected. It's still a very big drop, all right, 0.4% of a drop from 2.9 to 2.5 from the previous to the actual. So it is pretty good. Now, if you ask me, is this more closer to the target? Yes, it is much more closer to the target because yeah, anyways, that's supposed to be green as well, not red. So bit of a mistake there. It is much better because it's even closer to the target. But again, guys, it's not the core CPI. What it matters to us is the core CPI, right? Now, if we have a lower month over month and a year over year, including Brent and fuel prices and energy prices, food prices, sorry, how did we have a core inflation higher than expected? Can anyone explain me this? Or maybe have some, some idea of what could possibly made that? No? Okay, not a problem. So for that, we need to investigate. And the website we use to investigate CPI or any other data, right? NFP, anything that comes from US, we use the BLS. That's the Bureau of Labor Statistics. All right. It's a public website. You can just click here. Click on HTML. It's easier. Or if you want, you can download, of course. You can do the PDF. You can do charts as well. Or you can just do a Excel as well. Right? It's up to you. So this is what we want. Let me just check something here. Yeah, cool. All right, so there we go. Food and energy. All right, so these are the two main components we want to look at here. Food and energy. And we want to look from July to August. All right, so we're going to be looking at food at home from July, from 0.1, we've dropped to 0. So that is good. Okay. Now from energy, fuel oil, from 0.9 to negative 1.9. Yes, because the oil prices has dropped. And the gasoline all types from 0 to negative 0.6. And food away from home, I don't count much. Okay. Just because it's McDonald's is everything that it's already included on the food. So it should be similar, like one lower or one more. So from 0.2 to 0.3. So not much I would say not much don't waste much time looking at it. Energy services, electricity, it's the important one as well, from 0.1 to negative 0.7. Nothing too crazy actually, so that's really good. Shelter is very important as well, from 0.4 to a bit of a 0.5. So what actually made more of a, if we get these data, okay, and if we look to it, what has made the biggest change is the oil prices. So when they exclude these oil prices, then the rest pretty much went up, right? Because bear in mind, negative 1.9, so it's pretty much negative 2.0. So you excluding negative 2 to the math behind it. Let me clear all the drawings. And then this is why it's resulting on a higher approach of 0.3%. So that's the reason, because they excluded the oil prices. That was the biggest thing that brought down the inflation on the USA. Not only these, of course, we had NFP, we have the ADP showing that people have no jobs, and if they have no jobs, they don't have money on the bank account, and if they don't have money, they're not spending. Therefore, if there's no spending, there's no generation of inflation. Okay, so could you guys get it? Like, it's really simple to look it up. It's in to find why the things. It's all public, it's all listed. It has to be transparent as it is. Can we move on from CPI? Okay, no questions. All right, cool. Let's move on then. Let me close all of these. Okay, perfecto. Not a, oh, it's raining now. Okay, cool. Now, second topic I want to talk about is ECB, right? Yes, correct, Rainer. I can, actually can even send the website for everyone. So BLS is is the go to any data from USA. All right, not only CPI. Let me just give a bit of an introduction to BLS. I think I've never mentioned it too much. Look, Steve, that's a really good question, and I highly agree with you. I think yes, the numbers can be manipulated from one thing to one release to another, but we have to believe whenever we see, because if the data is manipulated or not, it doesn't matter in the end. You know what I mean? In a sense of the market will trade whatever the number is, and not where's the market manipulated or where's the market manipulated, the data manipulated. So in essence, it could be we will only know in the next release when they come and say we have to put down, we have to revise down the forecast or revise up the forecast and etc. So if it is or if it's not, it won't change much. Why yesterday market price action is two-sided? Sorry, Satish, in what way? Could you elaborate on your question? I'm going to answer Rainer Nelson question first, and then we'll come back to you, Satish. Right. So guys, BLS, yeah, BLS is a really good website. It has all the CPI, how they measure the CPI and everything else. They still have as well the NFP. Okay, so if you click on monthly labor statistics, you're gonna have here labor force. Where is home? Yeah, archives, browse for outers. Economic releases. Sorry. Employment projections or schedule inflation and prices, employment and unemployment. And then you have quarterly, monthly, inflation, everything is here. So you guys can definitely come here and have a look. Consumer price index, as we've seen, employment situation. Yep, employment situation as well. And then employment situation summary. It's a lot of information, but it's really worth the while. So I will send this website to everyone, so everyone can have a look at it. Oops, sorry. If you click on here, you don't need to go to DIP, all right? You can just come here, latest numbers. So unemployment rate, payroll employment, average hourly earnings, producer price index. So everything is here. Okay, employment situation, everything will be here, all right? Hopefully it helps. Right. I guess he meant that wasn't for the side reaction of the CPI in the market like all the times. First market take it as hot CPI, then reverse it. Oh, right, I see now. Okay. All right, thanks, Fitz. Because I noticed that too. I was expecting the DXY which shoot straight to the moon, but it didn't. I'm thinking probably all market are saving up the money for the rate cut. No, you guys are not wrong, but you guys are not right as well. And now it comes the thing. Why didn't the DXY, the index, moves, like, let me open here. Why it haven't moved on a crazy way? Okay, because if you look to DXY, yes, it moved, of course, on the 15 minutes. Right, we've seen this shoot up move here, but that was all, right? Nothing else happened later. So why didn't we had something bigger, something of a bigger move? The reason is because the market is so awaiting two principal data from PPI and FOMC that they don't want to trade this little move on the US CPI. Okay, so these are the most important things, and it's what I've always mentioned about. Looks like the market is trying to come back to this area here. So this is what I've always say. It's about the context. It's about knowing why and how these moves happen. So my opinion is that it's because we are probably waiting for a bigger announcement like the PPI tomorrow, or even the FMC next week on the 18th. Okay, so this would be my take on the move. Didn't mean so much too big. All right. Now moving on. Enough being said. So I've covered that already. That's good. Okay, this week I'm gonna select Euro area, interest rates decision. Okay. Now, who thinks that the ECB will cut 25 basis points? Just send me on the chat. Let's see how many people are thinking of a cut. And if you think that the ECB will cut, won't cut, will pause, just send 1. Yes. So Steve thinks it's going to cut. Who else? Oh, wow. Okay. So Rainer think it's okay. Rainer Nelson think it's not gonna cut. Okay, interesting. What do you think, Rainer? They won't cut. Why do you think they will pause? Interesting. All right. My expectation is a cut, right? A 25 basis point cut from 4.25% to 4%. Reasons are, yes, first thing, if they don't cut, this will make euro very strong, and that's going to be good because I'm actually long on euro dollar, so that would be good. But the market is widely expected ready for 25 basis point cut, for 2 distinctive reasons. All right, the first one is the CPI, the normal CPI, just the CPI, including food and energy prices. It has been the lowest since I think last COVID, right? Like when it started COVID 2022. So since 2 years. But the core CPI is still higher, and it's in 2.8% as the CPI is at 2.2. Right? So if we look at here for CPI, oops, sorry, core, no, let's have a look at here. Satish say ECB is going to cut 25 basis point, then say data dependent approach. Yeah, I agree with you. They're right for the US to go first because they have cut, but US hasn't. Oh, maybe that could be a good thing anyways. So as I say, so the overinflation is at 2.2%, okay? But the core inflation, that it's excluding the energy and the food prices, it's on 2.8%. Oh, what happened here? It's on 2.8%. So if we take a look at the the overall inflation of 2.2, this is from ECB, all right? So this is from the actual central bank. We can see that it has been lower since September 2021. It's on lower points than September 2021. So this is really good. That's a really good point for them in overall, okay, including energy and food prices. Now, when we exclude energy and food prices, we can see that they even had an uptick from 2.7 to 2.9 in May, and then July to 2.9, still no changes, and now to August to 2.8. So it would be very interesting to see what would be the next release on this data. I think that the most awaited data from ECB would be the CPI plus the, of course, rate statement and rate decision. If we look at it in a perspective of is it good or is it bad, please could you share the link to this website display? Yeah, for sure. So this is the ECB. I can share the link here. There we go. Perfect. All good. It's on the chat. So you can change the data range here as well. So if you want to put 2018, there you go. Oh no. Oh, anyways, so as I was saying, you can do this as well. Perfect. So we are coming from 5.7% all the way down to 2.8, but still too much, because even if you look here, the normality is maximum at 2%. All right. So there is 0.8% yet to come down. And the reason is that they won't cut 50 basis point that some people weren't expecting is because it's too high. But they have room for one 25 basis point cut. And then most probably on this scenario, on today's meeting. Okay, now, how will that affect the euro? There is two possible ways that I'm expecting to affect the euro. First, that are more likely to happen is short. Second, first more likely to happen is long, and second most likely to happen is neutral. What I'm afraid of is that the market won't take this data as important, and we wait for the FOMC, right? So the market won't move, the market price won't move, and then they will take these as a, okay, done. So now we know. Let's wait for the FOMC. And if we have another week of waiting for the FOMC, we will have a very, very ranging market, okay? If we look at euro dollar at this moment, let me bring it up here. Is anyone trading euro dollar at the moment? What trades are you guys having on euro dollar? Long, short? Okay. So if we bring up here euro dollar, that's a 15-minute chart. We've get out from one consolidation to another consolidation to then this big consolidation right now. Okay. Okay, Stevo is long. So do I. Where's my pen? There we go. Okay. So from here that they made, oh, it's too big. So from this consolidation, we had another one and then came back down, okay, as I always say it does. And now what I'm expecting is a pushback up to these levels of 1.10, 1.105, somewhere 1.105. It should be around here, okay. And if it can break through this high, this point here at 1.10, 550, then we could be looking to trading higher to this level, okay, at nearly 1.12. Now, my expectations are low for this to happen, okay? Not trying to be biased here, just because I have a long, I'm looking to the market to go higher, no. I'm just trying to play more likely. We have forgot to draw this one, but we have one here as well. But the risk scenario is to the downside, okay? So if we look to the 4-hour, if we look on the 4-hour chart, what we see is this guy here, okay? And we've seen as well a break of this structure, okay? So up, down, up, and then down again, and then come back to retest. And now we can probably come to this area. Right. Then maybe later we go to 112. All right. So this is another possibility that can happen. Okay. Even if it continues to come down, break through this level, then we would be looking around this other box. And that would be the last step here. And then we clean up all the, let's say, boxes here. All right. Again, I would be more favoring the long side, just because the data approach that they having, it's not working because it's still 2.8% on the core inflation. So that continues to show me that what are they doing is not helping. So the market may look to it and think, yeah, inflation will continue to go high. So therefore, we will continue to long euros and short in US. I think the most important event will be the FOMC, especially the September one. Okay, that's when everyone will be awake, no matter what time it will be. Actually, let me check what time that will happen. Let me put on USA next week. Let's see, 18 USA FMC. Oh, that's going to be on the 19th for me. Okay, it's going to be 4 a.m. Wow, okay. I will be definitely awake. Maybe I can even live stream. Maybe I can leave live, maybe I can even live stream. I send a link on the Telegram, and you guys can join me live, maybe. Right. So that would be my take for euro dollar. Yeah, it would be great. Maybe. Let's see what we can come up with. I'm gonna talk to my team here. All right. Do you guys have any questions? Oh, Rainer is saying that you mean ECB or FOMC don't cut? Yeah, it was nice to see the debate, right? US. Oh, wow. If they don't cut, US dollar will be really, really strong. Euro Aussie. Aussie dollar is so weak at the moment compared to Europe that we will probably have a up market. Let's see. Yep. Yeah. Exactly. Yeah. I would continue to long this pair just because Euro is stronger than Australia at this moment. Okay. Australia is a little bit lost on the monetary policy, and I think the market could feel it. So investors are looking to it as oopsie. They don't know what else they have to do. So therefore, I'm not putting my foot there. But Euro is pretty good on what they're doing, pretty steady on what they are saying. So most likely, Euro will be much more stronger than Australia. All right. I think I've said pretty much everything. So what about the ECB rate cut? How will the market react first in terms of Euro Aussie? No, it's not about the rate cut. So you guys have to understand something when everyone says about, okay, rate cut. But the rate cut is already precified. So the market is already, the market already know that it's going to cut 25 basis points or whatever, how much they're going to cut at the time. It's about the press conference. Yeah, correct, Sweets. It's about the press conference. All right. What are they going to say on the press conference? Nathan asked me a good question, guys. So Nathan asked me what they're going to say on the press conference. Well, it's pretty simple, as they always do. Oh, okay. So really simple. They're going to come in and say, look, overinflation has been coming down 2.2%. We've had an uptick on the core CPI with a 2.8%, still high, still out of our target. We're gonna have to be data dependent from now on. We've done a 25 basis points cut on this and this decision, and that's pretty much what they will always do. Okay, so that will drive euro. Probably I'm looking at probably down, unfortunately. Okay. Yeah, that's exactly right. Okay, guys, again then, this is so funny how accurate you seem to be. I feel like you're like God. That's so good. Nice. All right, guys, thank you so much for coming today. We're gonna end it up a bit sooner today then. Hopefully you guys liked it, and see you next Tuesday. Have a great weekend, everyone. And we are preparing a big surprise for everyone here. So stay tuned, because on the 24th you will know. All right, that's all I can say right now. See you guys. Have a good one. Ciao, ciao. Talk to you soon. Bye.